Hey everyone, let me ask you this question. What are the most important parameters for a stock to create multi-bagger returns? A profitable business model with strong moat for it to sustain and continue to grow for years, then top leadership with experienced promoters and proven track record of high quality corporate governance, then strong growth drivers for the sector to grow, and company should have a leadership in the sector so that when the sector would grow, company would also grow, and smaller market cap. Now, in most of the cases, the problem is that if a company has a profitable business with strong moat, experienced leadership, with proven governance record, strong growth drivers, then it would already be a large cap or mid cap. While it would continue to grow and generate great return, it's difficult for the company to generate 100x kind of return. But what if I tell you that there's one company that checks all the above parameter and it's a microcap company with a market cap below 1000 crore? Difficult to believe, isn't it? Yes, the company I'm going to discuss today checks all the important parameters required to create huge wealth for the investor, except for one parameter that I'll also discuss. Well, can you guess the name of the company? Okay, it's Max India, a part of prestigious Max Group that already has a huge business in India with listed companies like Max Healthcare that commands a market cap of 65,000 crore, Max Financial Service with market cap of 32,000 crore, that has got Max Estate that has got a market cap of 5,000 crore, and Max India has a market cap of just around 700 crore. The reason why it's a microcap company is because of the niche business it operates in, that is a smaller market size today. However, in the next 10, 20, 30 years, the sector Max India operates in is surely going to grow multiple times. And since Max India already has a first mover advantage in the sector, it is bound to grow. So the next few minutes, I'll try to decode the business of the company, its key moat, leadership profile, along with future growth potential. While Max India checks majority of key parameter, there's one important parameter that company doesn't check as of today. And that can be a key risk in its growth thesis. So watch this video till the end to understand the opportunity and challenges. And please don't take any buy or sell call based on this video. It's a humble request. My goal is to spread knowledge, not to give buy or sell call. If you want to create wealth in stock market, you would need conviction, and that conviction would only come when you yourself study the business. Otherwise, even 10-20% correction would create panic. Moreover, this video is not for traders looking to make quick money. It's only useful for long-term fundamental investor. If you intend to watch this video to make quick money, it's a request not to watch it. Alright, now let's get started. So Max India was established in 2020 when its parent company Max Group demerged its senior care and other elite business in June 2020 into a new subsidiary called Advaita Allied Health Service, which was later renamed to Max India. Max India is now the holding company of Max Group's senior care business, Antara, which is an integrated service provider for all senior care needs. So basically, Max Group, which is known for identifying early trends and creating successful business, is now betting on the emerging senior care space in India, which is already a $10 to $12 billion market and growing exponentially. Just to give you an idea, today there are around 13 crore senior citizens in India that comprise around 8% of India's population, and it's expected to be around 20% of the population by 2050, as the Indian population would grow old. Now, interestingly, today 17% of elderly people are living alone, and there's a drastic fall in the ratio of caregivers to the senior citizen. Earlier, majority of Indians used to live in a joint family, but now there's a growing trend for nuclearization where the next generation is settling down in different cities or even abroad due to multiple reasons like job opportunities, modern lifestyle, and so on. So the demand for senior residents in India is expected to grow multifold times. I'm sure many of you watching this video would also be able to relate to it. And when it comes to senior citizen, healthcare is the largest share of their expense. Clearly, senior healthcare is a big market in India, and that's where Max India has identified 5 verticals. First is residence for seniors. In this segment, company is building secure living communities for senior citizens. Since the demand for senior residence is growing, there's a significant demand-supply mismatch. So that's the first vertical. Then second vertical is assisted living. In this, company offers home care with all medical facilities which can be used for both short stay and long stay. For instance, a senior person might need care after an operation. Then medical tourism is also picking up in India. That creates opportunity for home cares. Likewise, a senior person or couple with physical or mental disability might need a special care home. While these categories nascent in India, it is a large and profitable market globally. Then third vertical is home healthcare. In this segment, company offers healthcare facilities at home. This is the fastest growing segment within healthcare because of various reasons like increasing in-hospital treatment, need for care post-hospitalization, convenience, and so on. Then fourth vertical is medical equipments. There is a growing demand for medical equipment related to physiotherapy, respiration, orthopedics, etc. And this market is highly fragmented. And fifth vertical is phygital platform under the name Age Easy, where company offers both digital and physical model for healthcare, where senior citizen can take consultation over WhatsApp and other digital platform. So basically, Max India is building an ecosystem around senior care that include a combination of residential projects and healthcare services. If you look at the progress of Max India in each of the vertical, its first community started in Dehradun, where all units are sold as of September 23 and continues to be cash and PBT positive with cash surplus of 125 crore. Based on the Dehradun project, company has learned few key things and pivoted its business. So earlier its old model was to buy, build, sell and operate. Obviously it was highly capital intensive model. So now the new approach is capex light model with a focus on core competencies, design, sell, operate. For land and construction, company would do strategic partnership. Then earlier the average apartment size was 3000 square feet, that has been reduced to 2000. The average price was 12,500 square feet, that is reduced to 7,000 rupees square feet. Then average maintenance was 50,000 a month, that is reduced to 12,500 a month. Earlier sale was mostly direct, but now they will leverage channel partners with sharp focus on digital channel. Then company built second community Antara Noida phase 1, which is again 100% sold out. Currently, Max India is building 3 towers in Noida with 288 units and finishing work in progress. In Bangalore, company is in final stages of agreement with plan to construct 550 units. In Hyderabad, company has finalized the commercial terms and soon going to execute term sheet. It's a huge construction of 750 to 600 apartments. Discussion is also going on with landowners in Pune, Chandigarh and Chennai. Company has mentioned that our target is to look at 1.5 million square feet of construction every year, and the Gurgaon Bangalore projects are in final stage of negotiation. That is a clear possibility. Then within the assisted care home segment, company has 68 beds operational in Gurgaon. They have tied up with for 150 beds in Bangalore. Then they are looking for 50 more beds in Bangalore. The scouting for Chennai has also started. They are looking for about 100 more beds in Chennai and NCR. Then Antara aspires to take their offering pan-India in the next 3 to 5 years, where it plans to invest 550 to 700 crore across all business vertical. Mind you, today company is worth 700 crore rupees in market cap. Out of this, around 500 crore of capex requirement would be funded from internal accrual and remaining via fundraise. On the screen, you can see the plan. Mainly the development would be in NCR cluster, Mumbai-Pune cluster and Bangalore-Chennai cluster. Within residents, target is 8 to 10 communities with 8,000 to 10,000 residents. Then 2,000 plus beds with 40 to 50 facility. Then Medcare products with pan-India fulfillment and phygital model with more than 50 health studio in 8 to 10 cities with pan-India online presence. Obviously, these are ambitious targets and not easy to achieve. If it was a new company depending upon investor funding, then I would have never discussed it. But since Max India is a part of Max Group, I think they can deliver what they have envisioned. Now there are already many players in India in field of real estate and healthcare. But senior healthcare require expertise in both real estate and healthcare, which itself create a high entry barrier. For a real estate company, it's easy to construct houses, but not easy to provide healthcare. Moreover, the current target segment of senior healthcare is very small. So obviously the real estate companies would like to focus on residential projects for everyone. They don't want to get into niche of senior care. Likewise, hospital companies would like to focus on hospitals and not on real estate. Moreover, it's a capital intensive business that requires a lot of money, again creating an entry barrier. And that's where Max India, with its decades of experience of healthcare and combination of real estate business along with strong financial strength, is targeting this niche segment that can potentially grow very big in the future. And that's where I think their moat is. Moreover, since Max India already has a huge network of healthcare facility, it would get direct access to senior citizens. As far as company's management is concerned, Mr. Analjeet Singh is the founder and chairman of Max Group, a $5 billion Indian multi-business enterprise with interest in life insurance, real estate, senior living. Mr. Singh was awarded Padma Bhushan by President of India in 2011. He is an alumnus of Doon School and Shri Ram College of Commerce, University of Delhi. Mr. Analjeet Singh also holds an MBA from Graduate School of Management, Boston University. Then Mr. Rajiv Mehta is the MD of the company. Earlier, Rajiv was founder member of Max Life Insurance, where he played an instrumental role in companies becoming a highly admired and profitable insurer. He's a graduate in commerce, postgraduate in human resource, and has attended an advanced management program at NCR, France. Overall, Max India has a very experienced board and leadership team. Folks, I've personally experienced that senior care is a huge business in the West. And considering the trend for nuclearization in India, I'm very certain that senior care is going to be a huge business in India. Yes, it won't happen immediately, but I'm looking at 15-20 years down the line. And that's where Max India, which is today just a 700 crore company, can really grow big. So overall, Max India is checking almost every parameter of a multi-bagger stock. But if you recall, I mentioned that there is one parameter which is not that attractive at this point in time. It's financials. If you look at company's revenue, it was 200 odd crore during demerger and then fell down badly during COVID. It quickly recovered from the lows, but since then, revenues have not grown in last 2 years. Company mentioned that they don't have more inventory to sell in residence and hence there is stagnation at this point in time. This might continue for some time. Company is operationally at loss with both operating margins and profits in negative. Since operations are in loss, its net profits are also in loss. The simple reason is because company is currently in the investment phase and it will take time for the company for the investments to reap reward. Here one very important aspect you must check is cash from operation, where company is consistently generating positive cash in last 3 years. By the way, Max India is virtually debt free with debt to equity of 0.03. Currently, company has around 165 crore of cash and cash equivalent. So overall financials of the company are not very supportive at this point in time, which is the negative aspect I was talking about. Apart from this, Max India has entered into too many verticals together and all of them are niche. So there's no guarantee that all of them would grow big. They still need to achieve a product market fit in many of these categories. So it would be interesting to see how each of these verticals evolve over the next few years. Please note that the current business model is not yet proven and that might also be a key risk for the company. And last important aspect is that since senior healthcare is looking like a big opportunity, there are a lot of new age companies trying to enter into this space. This slide gives a good picture of various new age companies trying to capture the value chain of senior care. In fact, even insurance companies are starting to look at care at home as potential segment. So going forward, as the opportunity in senior care would expand, I expect the competition to get more intensified. Although Max India has a strong moat in this space. Folks, normally I don't cover microcap stocks because you generally don't get detailed information about a microcap company. Plus, they're extremely volatile without a proven business model and unknown leadership. But Max India is not only publishing a detailed annual report, they're also publishing investor presentation every quarter and conducting analyst call after every quarter to update on the progress and publishing quarterly con call details. It provides so much of information and transparency. You can access all these documents via Screener platform. In fact, in spite of being a microcap company, Max India has 10.5% stake from FIs and ace investor Mr. Porunchu Veliad is also invested in the company in December 22. Interestingly, promoters have increased their stake in the company big time from 40.8% to now at 50.9%. That itself speaks about the confidence of promoters in the company. Public holding has consistently reduced from highs of 50% to now at 37%. That is again a very positive sign. Now a lot of people want to know whether I have invested in this company or not. So I have already discussed Max India a few months ago in my weekly series where I also discussed the latest trend in the economy. Then hot sectors in the potential stocks along with my own portfolio and investment strategy. So in case you want to know whether I have this stock or not and which stocks I am bullish on with my own money, you can explore this on my website. I provided the link in the description. Friends, a lot of people ask me, Sahil, please suggest us companies that can become the next Titan. Honestly speaking, 20 years ago, nobody knew that Titan would become so big and generate multi-bagger returns. Likewise, today I can't assure you with 100% confidence that Max India would be the next Titan. If I do that, I would be fooling you. Yes, all I can say is I see that Titan kind of growth potential in the company. Overall, my concluding thoughts are that there is no doubt that senior care is a mega trend in India for the next 20-30 years. Max India has all the required expertise to lead this trend. However, it will take time. Now, I request you not to directly jump to buy the stock right after this video. Please understand that the next few quarters could be lean as there is no inventory at this point. So don't expect stellar quarterly results. And in the short term, its share price can also be very volatile as it is a micro-cap company. So you might need a lot of patience and courage to remain invested in the company. Generally, retail investors don't have that patience and courage. For them, the stock should jump immediately. I'm afraid this might not be the case with Max India. So keep this in mind before investing your money. As far as valuations are concerned, currently company is trading at around 160 to 170 rupee, and in last 1 year share has jumped around more than 50%. Since company is in loss, we don't have PE ratio. However, its price to sale is 3.8, which is higher than its historical median price to sale. In the long term, company is yet to prove its business model. So at this point, you need to keep both pros and cons in mind before taking any investment decision. Personally, I think it's worth taking a bet if you have a long-term mindset of 5, 10, 15 years. However, there is no need to rush to buy the stock in one go. Since market has rallied a lot, I expect some pullback in the coming months. I think Max India can be considered to invest in SIP mode, but only after do your research and become convinced with the growth story. And like I said earlier, stock price can be volatile, so keep that in mind. If you are someone who might panic from 20-30% correction, then please be careful. This might not be your cup of tea. Now tell me in the comments, what do you think about the future of senior care business? Is it worth taking a shot on Max India? If you find this video useful, do share it with your friends and let me know which company you want me to discuss next. I'll see you next video. Till then, take care.